Hello, welcome to this preview on the budget and cash flow forecast product package within ESS BIZTOOLS. In this webinar, we're going to discuss with you the three main budget and cash flow forecast products that we have developed for inclusion within ESS BIZTOOLS. These relate to setting retail prices, setting trades charge-out rates, and fee setting for professionals. And this includes the full budgetary process, which we'll now share with you. The first form I'm going to is Form 151002, which is the retail calculator. So the whole concept here is trying to show your clients how they can set retail prices to be able to improve their business performance. So they're the agenda items. There's some instructions there for you to utilize in this process. There's a labor on cost calculator, which we'll just go back to the beginning. Provisions being made for a whole range of different classifications of employees for you to enter. You enter the type of classification and then record the annual leave, any shift worker allowance, holiday pay loading, statutory holidays, personal care leave, superannuation rates, payroll tax, etc. that might apply to those classifications. There are additional classifications provided for you to fill in other people. And then the system will do the calculations to calculate the on cost on an annualized salary. The system will then look at permanent full-time employees on the same basis and part-time employees and casual staff, so that all of the components of the labour on cost have been included in the calculation. We've then got the calculation of labour budget, which is linked to the labour on cost calculations and is fed through the system. The reference numbers are the same. They're linked back to the labour on cost. You insert the number of individuals, the individual gross salary, and the system will then calculate the labour on cost, the individual employment costs, and the total labour costs for each classification. Then the part-time staff, and then the casual staff, so you end up with total labour costs. The next area to look at is the budgeted overhead expenses for this particular business. This is the overheads excluding labour and labour on cost, obviously, because we've already calculated those. So there's a form there for you to complete to insert the overhead expenses. We're then ready to move to the financial analysis. So this requires you to enter how much is the investment that your client has in this business, what's their targeted rate of return. So if their investment was $500,000, their targeted rate of return was 20%, they'd be looking for a profit prior to income tax of $100,000. The gross profit target is then determined. What are the total labour costs? These will automatically be transferred. What's the overhead budget? What's the projected net profit from Section 4? So that then determines the projected gross profit for this business. what do you think the overall gross profit percentage would be in this type of business? Based on the gross profit figure that's been determined, what will the sales then have to be? That is an indicator. We've then got the mix on purchases. There's provision made in the system for 3 calculations to be made. We'll just go back to the first one. What you insert on the left-hand column is the departmental purchases that you believe the client would make. What's the purchase price? What's their current markup percentage? The system will then calculate the markup and what the sales figure will be and what the gross profit percentage figure will be. And at the end of that, you will then get an analysis on the performance, which will automatically be inserted. Based on this mix of purchases and markups, the sales would be a certain figure, the purchases, the gross profit overall, the gross profit percentage would be calculated. And then we've got the budgeted labour and on costs and overheads and labour to give you the forecast net profit from this example. That will then be compared to what your target was, $100,000. And the system will then show you at that average gross profit what changes will need to be made to achieve your profitability of $100,000. So it enables you to undertake some what-if analysis for the benefit of your client. Then you can show what the changes would be if some subtle changes were made to things like the composition of the purchases that are going to be made and the markup percentages that are going to be applied. So that at the end of this process, you should be able to determine the prime purchases that are going to be made, what the markup percentages on each individual product category are going to have to be. That will then give you your sales figure. You already know your labor on cost, your overhead expenses, and the desired profitability. And that should be what your targets are then brought back to. So you would use these 3 calculators as a means of massaging the figures, having a discussion with your client, and developing some strategies. Now, obviously, in a retail business, once this has been done, these figures then need to be closely monitored. If the markup in a particular section is expected to be 250% based on purchases of $1 million and then the appropriate sales figures, and then the sales are not achieved, therefore you don't need to make as many purchases, changes then need to be made so as to keep the business on track. This is not doing some calculations and setting them in stone for the year. Management then needs to be very conscious of what is happening week by week and most definitely month by month, and then making appropriate changes to keep the business on target. Subscribers to this product will have access to a fully worked exercise on this process that we've developed as a webinar. That is in the material that is available to a subscriber so that they can get a good overview of how this system works. So that is the calculator for retail prices. We're now going to go to the setting charge out rates for trades. Tradespeople are obviously different to retail shops. The instructions are similar, but there will be some variations. The calculation of labour on costs is basically the same, but once again, they're supplied in these three major components: permanent full-time employees, permanent part-time employees, and casual staff. The calculation of labour budget is similar, but there are variations, because in a labour budget for a trades business, the details of the full-time staff will come through, the permanent staff, number of individuals, gross salaries. Those calculations will be made. But then the variations from a retail budget will be that obviously work hours are very important for us, so that we would require you to insert, and you would get this information from your client, as to the individual hours, less leave, and the individual network hours, and then you would need to insert the productivity percentages for each classification. The system will then calculate what the targeted chargeable hours are. And then we get the total hours and the total chargeable hours for the business. Those calculations are made for the various labour categories that the business might have, and then you would get the total labour budget. Within trades, we would then go to the budgeted overhead expenses, which need to be inserted for this business. Within trades, we have this different idea of materials being purchased. So there's a markup that's normally determined by a business. So we've got provision for you to insert what the estimate of purchases to be made by the trades business to be supplied to customers would be in a year: $1 million, $2 million, $500,000. And then you can insert the targeted materials markup, which might be 10%, might be 8%, might be 15%, which would give a budgeted materials markup income figure for the business. In many trades businesses, there are write-offs. So if the business has a record that they do mark up 5% of their labour income, we've got provision for that to be inserted. And then the system will calculate the targeted income from sale of labour. We've got the total labour costs, including on costs, the net profit, and the overhead expenses. And we've then deducted the benefit we're going to get from the materials markup, allowances for any write-downs or write-ups, to get the total labour to be recovered from the charge-out rates by the individual employees in the year. This then requires the calculation of what we're calling the base time cost. This will all be processed automatically by the system for each employee. We'll have the employee's classification, the total labour cost, the hours worked, and then a base cost will be determined to be utilised in the calculator. The system will then calculate the business overhead expense, which is based on the labour to be recovered divided by the base cost of the chargeable hours, and that is a figure that's then utilised in the costing calculations. Then the calculator will work through the individual classifications, showing the base cost per hour, the overhead factor to be recovered, and will determine a calculated hourly rate to be charged by that particular person. The system then has a proof of the charge out rates, the classification, the hourly charge out rate to be utilised, the chargeable hours that we are budgeting for that classification, what that income will be when it is multiplied, and that will be totaled, so that you've then got the budgeted profitability. We're going to have sales of labour and sales of material, less the allowance for the write-offs, the materials cost, the labour and on-cost, the cost of sales, gross profit, the overhead expenses, which will then come back to the forecast net profit. So mathematically, the formulas will be proven. The key then for management is to ensure that they closely monitor the markups that have been applied to any products that have been purchased by the business to then be supplied to a customer. And the other very important component is the labour productivity figures. If they're budgeting that a tradesperson is going to achieve a 75% charge out rate that is stickable to a job, then they must ensure that each week and month these figures have been analysed to ensure that that's been achieved. If the charge out percentage for a particular trade drops to, say, 70%, our recommendation is they revisit this calculation and an amended charge out rate is determined, because this calculator is based on the theory that the business will be able to achieve the individual employee charge out rates that have been set. Within the overall product package that a subscriber receives, we have a fully worked example of the charge calculator for trades that you would then be able to watch that video and see the actual calculator being put through its paces, so that you would have a very good idea of how to utilize this particular calculator to assist your clients who are involved in trades to set charge out rates, markup percentages for products they're purchasing in, their overhead budgets, all with a target of achieving a predetermined profitability figure. We're now going to have a look at the professional fees charge out calculator. We believe that this calculator could be used for a wide range of professional practices. The instructions are very similar. The calculation of labour on cost is basically the same as what we've looked at for trades and for retail. And it's again in the same key components: permanent full-time employees, permanent part-time employees, and casual staff. And there are individual sections that you can utilise to incorporate what we believe will be the various variations that can occur in a business. We've then got the labour budget calculator. This is transferred through, and once again with the same reference details from the labour on cost calculator. You insert the gross salary, the system will then do the calculations to determine labour on cost, individual employment costs, the leave, individual net, and then the key question that you will have to insert, or the person preparing this for a client, is what is the expected productivity percentage for each of these labour components. The system will then calculate what the chargeable hours should be, what the total chargeable hours should be for that section. And this is then the labour budget, which is dissected into the various labour components again, which will give a total labour figure to be inserted later on. We then have the budgeted overhead expenses, which you will have to insert. And then we have the targeted income from sale of labour. Obviously, we've got the cost of labour, including the on costs. The targeted profit that the business has set has been entered, and the overhead expenses are added in. Allowance for any write-offs is inserted, and the total income to be recovered is then able to be determined. We then have a similar formula for the calculation of base time cost as what we had in trades. So the system will calculate that figure. And the system will then calculate the professional charge out rates for each classification to absorb the base cost per hour and the practice overhead factor to determine a hourly charge out rate. And the system will then show the proof of that, showing the individual classification, the hourly charge out rate, showing what the total income is. And that will then be able to be compared to the total income to be recovered, the calculation that was determined earlier. And then we will have the budget profitability proof, the budgeted income from professional fees less allowance for write-offs, net professional fees, the labour on cost, the gross profit, the overhead expenses, budgeted profitability, and that will be compared back to the targeted profitability. The key factor, once again, will be business management will have to be monitoring what the actual charge out hours are being achieved weekly and monthly to see whether there needs to be any fine-tuning to the labour productivity targets. And if there is, obviously that's going to be fine-tuning of the charge-out rates. There needs to be a monitoring of the overhead expenses to see whether there needs to be any changes made there. The overall aim being to ensure that these fine-tuning exercises are carried out during the year so that the business can, at the end of the year, achieve or get very close to achieving the predetermined profitability for this business. If you become a subscriber to ESS BIZTOOLS Budget and Cash Flow Forecasts, you will also have access to a fully worked example of the professional fee charge out calculator so that you can utilize this in your staff training so your team fully understand how to use this very important product tool to assist you to have a very important discussion with your professional clients as to how they will go about setting their targets for the next financial year. Have a great day. Goodbye.